All right, we are live. Silver Doctors live on air. It is Monday morning, the ninth day of the month of December, and I'm excited to be back for another episode. Mr. Paul Halfdollar, how you doing, my friend?
Doing good today, Mike. It's good to be back. This was a quick weekend and a cold weekend, but it's nice to be back in the thick of things. This is a very important week, so.
Yes, it is. And so it was a very, that's the thing, like it's wintertime now, so I expect it, not surprised at all. And so just try to stay bundled up and keep it moving. So
Mhm.
with that being the case, let's give it a second. I see a couple people chiming in or starting to check in. So as always, if we have any new viewers, let us know where you're watching from in the chat and we'll acknowledge your presence. And also, if you guys have any thoughts, comments, articles, or news stories that you came across over the weekend, you want us to touch on it or introduce it to the community, let us know in the chat, and we'll definitely do that. So, we got
Mhm.
Conscious Observer says, "Good morning, Silver Doctor." We got Bobby Jones says, "Good morning, everyone. Have a gold and silver day. God bless America."
I like
That's
that.
nice.
Instead of have a good day, have a gold day. That's nice.
All right, man. So it is Monday morning. Let's kick this thing off right, Mr. Half Dollar. What do you want to touch on first?
Mhm. Well, this is a huge week as far as events go. So there's two events this week, and one of them is on Wednesday, and that's the FOMC, right?
Mm-hmm.
And I looked just this morning, and just this morning, the CME group updated their probability, and the probability of the Fed holding is over 99%, right? Over 99%.
Okay.
And there's basically been no probability of a rate cut for almost going back an entire month. So the bottom line with that is the markets have fully priced in a hold on interest rates this week. I really don't think that there's going to be a shocker one way or another. So I do think that they are going to hold. But I think that on top of that, what's that mean? That means on Wednesday, the people are going to be looking for clues coming out of the Fed, coming out of their statement, and coming out, more importantly, of Powell's press conference to see if he's hawkish or if he's dovish or how he's going to be when it comes to his outlook for the economy. So that's on Wednesday. And then on Sunday, right? Bad things always happen on a Sunday, but Sunday is the 15th, right? And that's the day that, is supposed to be one of these pivotal kind of days with the trade war, because that's the day that the trade war, that tariffs could be coming back on Chinese products and stuff like that. So that's Sunday. And then in between that, starting on Wednesday through Friday, the first couple of days is light, right? I'm not expecting a whole lot of movement in any of the markets really over the next couple of days, right? Everything's just kind of in like a holding pattern. But starting Wednesday, we start getting some inflation data. We get CPI. Thursday, we get PPI. And then Friday, we get retail sales. So this is a very important week. And here's my overall sense that I'm getting about it, right? I just have a feeling that people are just a little bit too confident in, thinking that the Fed's got this, right? They're too confident in thinking that President Trump's got this. There's just what I see is too much peak complacency with the Fed in the markets and with President Trump and the economy. Just again today, he's tweeting out greatest economy ever, and the Fed sees the U.S. economy as some, island of prosperity and an ocean of economic collapse, right? So.
Yeah.
Those are some of the things, and that's got me like kind of thinking like if everything is so smooth on the surface, something big could be building up here very soon. So those are just my initial thoughts coming into the week here, Mike. What do you have to say about that?
That is a very great rundown as to the what's coming, what's expected, and so my thing is with was it about 3 weeks left, if I'm not mistaken, of the year 2019. I personally am not looking forward to any particular thing. So, whether they hold or not, or drop or increase the rate, Fed funds rate, not too really, not too cautious of it as personally myself. I'm more so like, okay, how do they want this thing to play out, and then how do they want the new decade to start? So I'm really focusing on just basically just telling people right now, take advantage of the opportunities you have in front of you, prices of the metals, whatever they may be today. Enjoy them, because 2020, I'm more than confident that we're going to see some activity, whether it be in the markets or whether it be with the trade situation or all the developments that's happening outside of this country. And so I think with all the Eastern powers that be, Russia, China, all the things they're doing, India, and there's so much activity over there that we rarely focus on that because we're so conscious and so conscientious of what our president says. And so I have the tweet up right here saying the best economy ever, and whether that's fake news, real news, I don't know how you want to consider that. So
Yeah.
uh, go ahead.
CNBC, it's selective fake news, right? So if he doesn't like it, it's fake news. If he likes it, it's good news, right?
Exactly. So
This one gets
go ahead.
So this one gets the good news side. And you bring up a great point about like China and Russia and stuff like that, because one of the articles that I was reading today, And you have to take this with a grain of salt, right? But that China has ordered all of its companies and government like offices and stuff. So like public companies and government offices to get totally rid of foreign computers and software within the next 3 years. That is huge, right? And why is that huge? Because, we talk about de-dollarization a lot, but the way that I like to think about this, right, is this is like Silicon Valleyization, or however I could even say it like that, right? And that's big. Because if you think about like what the United States has been exporting for the last several decades, it's been our technology, it's been our software, it's been all of this like intellectual type stuff, right? Yeah. So that's huge. Those are big companies, right? Microsoft, Dell, HP, and those are real companies that actually make things. They're not just like companies that are just like, unicorns. They're actually companies that employ people, have real building, have real plant and equipment, and actually make things. So this is a big development. Yeah. And it's something that just when I see something like that, what's going on in China, I think, on the one hand, people are looking at de-dollarization, but on the other hand, there's this like backdoor, like undermining the foundation of the U.S. technological-based economy.
Yeah. It's ultimately boiling down to a dethroning of Western hegemony.
Yes.
So that's another thing. Hegemony. So I've heard that word several times. I always butcher it, but it's just a dethroning of the Western powers to be. And so when I saw the article about China ordering all their, I think it initially said a government, whatever, to get rid of foreign, I'm thinking like, man, that's a direct blow to the U.S. So you have all and that's in retaliation to that Huawei situation where they're holding hostage the one of the vice presidents, young lady, whatever, up in Canada. So I'm assuming that's still going on. And so once again, think about the ripple effect from that. So the rest of the world now is watching the U.S. be challenged directly, knowing that the U.S. will not do their typical actions or responses of declaring them terrorists and then going in there and trying to dethrone President Xi. And so because of that, it gives a lot more encouragement and possible permission for other nations to also follow suit, especially if you're a China ally or you're part of that BRICS, One Belt, One Road Initiative platform. You can probably also look to Silicon Valleyization.
Yeah. So. Yeah. And if you think about it, right, like, and also what is this also like at the very like, face value level? This is like fiscal stimulus, right? This is like stimulative because this is a huge undertaking. This is a massive like project that they would be going under. Yeah. So this is like huge, and it's kind of like flying under the radar right now. Yeah. I'm definitely
going to use that desiliconization. I'm going to use that one. So just as a heads up.
Because I mean, I read Silicon Valley at least 10 times a week, talking about Silicon Valley. So, it actually, if, it would make sense for them to go in there and attack Silicon Valley. And here's the thing about IP, right? And I get the whole IP thing, but on the one hand, it's a losing battle because everybody's like, well, we got to be tough on the Chinese because they're stealing our intellectual property. Yeah. Well, you know what? I mean, we steal their intellectual property, right? It's like, that's what nations do. That's what people do. Everybody is stealing everybody else's intellectual property, right? When IBM came out with their operating system, right, it was reverse engineered, and then you came up with the IBM compatibles, right? So, it's just, this is something that's going to go on and something that has been going on. So it's just, there's no real way to combat it one way or another. All that you could do is you can build up this wall and this fortress and, not let anything in or out, but then you retard your own development when it comes to scientific advances. Good point. So it's sticky and it's tricky one way or another, but either way, this is a big development. I don't say, because we hear the U.S., right, talking about we got to get tougher on the Chinese and Chinese technology and all this and all that, but really, we need Chinese technology, whereas they don't really need our technology, right? I remember reading a statistic, and I can't remember where I saw this, but here's what it comes down to, right? I saw something like the average American student is like 4 grades behind the average Chinese student in math. How can you compete with that? You can't compete with that, right? And that's just bottom line. They're going to be taking that technology because they're smarter and they can reverse engineer that kind of stuff.
Wow. That's very shocking, the statistic or whatever that is, because I always knew we were well behind the curve and when it comes to education, especially in the arts. because I know, especially in Europe from my years back then, I mean, art's big, and it's considered more like even the sports are considered arts for them, to where they actually have schools that specialize in basketball at a very early age. You get a degree in some form of basketball training over there. So I'm thinking like, wow, like that's different. Yeah. And then, yeah, I've heard several stories about how the best engineers and whatnot come from over there. They come over here and just get a little bit of our education, then they go back, and then they just take it to another level. So, yeah, interesting, man. So we are in some, extreme theory.
Definitely. Yeah, if you wanted to welcome the people to the chat, looks like we got a few more people tuning in now, Mike.
Definitely. So, as always, for those that are tuning in, appreciate you taking time with us this afternoon. Any new viewers, let us know where you're watching from. We got Big Bubs from Dayton, Ohio. Silver Junkie says derivatives jumped over 114 trillion over the weekend. Wow. Okay, that's some serious news there. Why isn't anyone talking about that? So, Silver Junkie, we can definitely touch on that. What else we got here? We got Jay Ward. We got The Conscious Observer. We got I Jezel, if I'm not saying that correctly. We got Tom, Albert S. What else? We got Conscious Observer says Silver Doctors. Says it looks like Paul Volcker died today. Yes, I saw that. He's 92 years old. The new BIS report is a must read. Speaking of BIS report, I was going to talk about that. So we definitely got that. And so Albert S., I think here's something else you referenced earlier, Paul, about the raising tariffs. Do you think between now and the time it's set the trade deal situation unfolding, will they be raising tariffs, or could we see something? What do you anticipate? Will they be raising tariffs again?
I don't know. This is getting harder. This is getting harder and harder one way, because it's like within the same month they're off and they're on, right? So it's like there's so much flip-flopping on the tariffs just as much as there is on the dollar. So, I don't know if they're going to come back on or not, but whatever happens, I really do think it's going to be over the weekend, or at least it's going to be Friday after the markets close. Yeah. Remember, President Trump was on the tarmac that one day saying, we're not going to raise tariffs so Americans can have, so it doesn't affect Americans this holiday season. But by that time, the 15th, right, by the time anything would kick in, that wouldn't really matter anymore. So, we really could see these tariffs being raised here on the 15th, because we're no longer into affecting the holiday shopping season.
Yeah.
So if I had to go one way or another, I would be leaning towards yes, the tariffs will be coming.
Okay, so if you're literally looking for a good deal, whatever that deal is, whatever that phase one deal is, then would you really consider doing that, given the fact that it's going to prolong things even more, because they're going to retaliate? So what I've noticed a trend now, Trump will come out saying that he's going to impose them some type of additional tariffs or more tariffs, and then China responds, and then they'll say, well, we're going to do this to do that, and then Trump a tweet, the economy's doing great, they're paying taxes and tariffs, and then we'll have a little market turbulence. Then he'll blame it Jerome Powell, saying he's behind the curve, we need to cut rates. Then it'll come out a special report. Next month in Mexico, we're gonna have a new trade agreement. We're gonna have everybody sit down again.
Yes.
That's those same 5 events seem to occur over last year now.
Yes. And you forgot one. And then it'll be, President Z has said that he's going to buy more soybeans. So in a gesture of goodwill, I've decided to reduce the tariffs from 10% to 8% or something like that too, right? So it's like a face-saving gesture there.
All right, so sorry to cut you off. We do have a call. Let's see if we can get this call. Hello, caller. What's your name? Where you calling from?
Hey guys. This is Matt from Nashville again.
Matt, how you doing, my friend? What's on your mind? Doing good. What's on your mind, my friend?
Man, I got a question for y'all. I've been listening to a lot of stuff over the weekend, and with the Fed meeting coming up, and some people were talking about how one of these days we're going to have that Fed meeting where they introduce MMT, and I was curious on what you guys' thoughts were on MMT. I'll hang up and let you guys hear what you guys got to say.
Appreciate it. Thank you, my friend, for calling in. So my little 2 cents, Paul, and I'll let you touch on it, is that I don't think the Federal Reserve will be announcing MMT. MMT is going to be on the fiscal side. So therefore, there will be some type of agreement or something where the government, so Congress or whatever, come together and saying whoever the next president or presidential candidate might be, give or take, or even Trump might spin off a version of MMT. But I think Jerome Powell would rather, and start in 2020 especially, shift the need for indebtedness into the government so they can put out some type of plan. So MMT will come from the government, not necessarily Jerome Powell, in my opinion. But he could announce some type of direct injection into the people's hands. I've heard that mentioned several times. So, yeah, what do you think about that?
Yeah, I would say exactly what you just said. Because it will be coming from the government, right? Because technically the Fed is not supposed to be, deciding fiscal policy, right?
Yeah.
Even though Kashkari came out the other day and said maybe it is, maybe we're thinking about it wrong or whatever it was that he exactly said. But then again, with what they're doing right now with the repo market, it's like it's MMT, but don't call it MMT, right? And that's going to be like the joke, and it's going to be disgusting, but that's what I see coming, right? So they're going to announce something, but it's not going to be MMT, and don't dare call it MMT. That's what all the apologists will say. I'm starting to think that 2020 is going to be the year of the decline in the dollar. Because if it goes along with my theory that the deep state globalists want to bring on maximum pain and time it to the election, then by the time November comes around, there's going to be a lot of pain felt in people's wallets, right? So, I think that when that announcement comes, I think it's going to be after the election, right? Because there has to be the crisis first. So while, yes, when the Fed comes out, they could announce we have worked in agreement with the government for this MMT program. So it's not the Fed announcing that the Fed is going to do it. The government's going to be the one that's going to do it. But I can see the announcement coming. But still, that announcement can't come until after the crisis. There has to be a crisis first.
Fair enough. So we have another call. Hello, caller. What's your name? Where are you calling from? All right. 1 second. I'm sorry. 1 second. 1 second. All right. All right. Sorry about that. Okay. Once again, who are we talking to this afternoon? Hello? Hello? Hello, are you there? All right, I thought I heard low blood pressure, but maybe not. Hello, is it, hello? All right, we let it go. Give us a call back. Sorry about that. All right. So, okay, good to say good thoughts there. So MMT, it's inevitable to me because it's going to be the need to stimulate and inject. So go ahead. I'm sorry, go ahead.
This is just something I was thinking about today, Mike. And it's just really simple. It'll only take 1 second to cover. But I can't remember. I think you said the number, but I can't remember. It was like 9 something billion or something like that over Cyber Monday. But basically, the bottom line is there is this boom in online sales. Mm-hmm. Here's my question about that I just started thinking today. I don't know how this is calculated. I don't know the methodology. But remember, this is very important. eBay just started collecting sales tax this year, right? A lot of online companies just started collecting sales tax this year, right? Mm-hmm. So my question is, with the methodology, and I didn't research it because I haven't had the time to research it today, but I just started thinking about it today. Is all this boom in online sales counting money that's paid in sales tax? Because if so, let's just say on average, because some states, not very, very few have zero sales tax, right? But then some have, over 8%, right? I remember in Texas, it was like 8.125% when you factor in the county and then the state and then all this other stuff. Uh-huh. So my question is, let's just say on average, it's 7%, right? So if online sales are up 7% on average this year, are they counting the tax? Because if so, then that means it's flat. And then if retail sales on the brick and mortar side are down this year, that means we're actually declining with retail sales this holiday season.
Good point. That's one thing that we will not hear that particular narrative broken down in detail to paint anything other than a pretty picture for this past holiday or current holiday season. So I don't anticipate getting those type of statistics given to us because that would definitely put a little dim light on the push for everyone to go solely online e-commerce.
Yeah, because, a lot of places now are also, that's one thing. And then the other thing, like a place where I buy computer components, they had like this kind of deal with kind of like Prime, right? Mm-hmm. Where you pay and you get free shipping and you get 3-day shipping and all this and all that. They don't even offer that anymore, right? Yeah. So my point is, with people charging more for shipping now and with taxes coming into the mix of things, when I'm making my purchases online, if I see something for $100, I'm always ending up paying like $120 by the time it's all done said with, and that's like 20% more of what the actual price was. Yeah. When you factor in shipping and tax. So my point there is, there could be some funniness behind these numbers that we're not being told.
Yeah. And another thing that I think is worth mentioning, which is a little bit off subject matter, but I noticed it in the chat here, that starting tomorrow, December 10th, that will be the new YouTube, as somebody put here, the YouTube Apocalypse starts tomorrow. And so that's going to be interesting to see how that plays out between now and the end of the year. Because definitely a part of this whole apocalypse for YouTube and them basically putting the ownership of your content upon you, not them, as them just being a hosting site. they're positioning themselves to basically say that we don't like your subject matter. It goes against policy, therefore your channel is gone. So one day there might be a chance where you go to look for Steel Doctors or whoever else, and it might not be there because it's removed. So between now, probably we're going to definitely have to have a backup channel. And so, Mr. Habdallah, we're going to talk further about that so we can give people options to catch up with us outside of here. So that will definitely be set up by Wednesday. I will get that done. So, but yeah, so that's something worthy of talking about. And then there's a question here from Mr. J. Ward that says, why does Canada think they can keep interest rates untouched through these times, holding no gold in reserves? They seem pretty comfortable with the way that things are going. Yeah, I don't follow much happening in Canada, even though it's literally maybe 20 minutes from where I'm living. So yeah, that's a whole other issue there because I'd imagine they are in a world of trouble there, but they actually know something that we don't. So.
Yeah, and remember, Mexico is like officially in recession now. I think they're actually like saying Mexico is in fact in recession. Remember we were talking about that like months ago before other people were talking about that. But so my point with that, right, is that, if Mexico's in recession right now, right, then Canada is like either right there or close to it. As a matter of fact, is Canada actually in a recession right now? I can't remember if they are or they're not, but they're like either like on the verge or real close to it as well. And then it's just time before the U.S. follows into that.
Yeah,
right.
Here's the thing: I wouldn't doubt, depending on their own metrics of was it two negative or two retracting quarters or whatnot of GDP growth and all the technical stuff. I would imagine everyone on the globe is probably hitting some type of stalling of their economy and retraction of whatever. And so it's just the matter of the U.S. being the last one. Like we would definitely be the last one because all activity revolves around us. So I wouldn't doubt if Canada was, and yeah.
And I can't remember where I heard this, but I heard this, and it was just like the most simplistic way of thinking about it. But it was like, is GDP even really positive now when all that we're doing is adding on this GDP based on debt, right? So if it's debt, is it even really growth? And that was just like a philosophical question, and I can't remember where I heard that, but it makes total sense, right?
Yeah, according to their methods, I wouldn't doubt.
Yeah, like if you take out, like the point that the person was making is that if you take out the increase in debt, GDP is negative, right?
Yeah, and so it looks like Conscious Observers wants us to touch upon the BIS article on September 17th. Repo Apocalypse called it a multiple long-term capital mortgage moment, please. So let me pull up this article here because apart from hearing about it, I haven't dived into it deeply, but it has a lot to do.
I haven't read that yet. I heard about it,
so we can go through it together just real quick. So here's the article I did pull up this morning because I was planning on getting to it. But it talks about the repo blow up was fueled by big banks and hedge funds, says BIS. And so assuming a lot of the information that's being referenced to is in here. And so it talks about basically in September how that overnight lending amongst banks went sky high, surged to 10% from 2%, causing a panic. Therefore, the Federal Reserve got involved, and now that is an ongoing process. And so the BIS, it looks like they're admitting to the fact that it says the four banks that dominate the market hold about 25% of the reserves in the U.S. banking system, but 50% of the treasury. So it looks like as a result of September, they're considering it to be the the capital mortgage management entity that went under, and it being the trigger for that entire little episode we had back then. So I would definitely dive on this more as I look into it. But other than scanning through it, I don't want to comment any further. But clearly, go ahead.
Yeah, I haven't looked into that today just yet, but from what I'm seeing from the headlines without looking at the articles, I'm definitely seeing that they're still in problem mode and they're still pumping tons of money into the banking system in these repo interventions.
Yeah.
So nothing. Not only is it not fixed, but it's getting worse.
Oh yeah, and it's the new norm. So just the fact that BIS is commenting on it and they're shining their light on it, and they're part of the whole. They're a part of the whole gig. So definitely the trigger was initiated in September, and now there will be no stopping this repo action because, like always, once something comes easily and relatively free, such as this whole capital situation, liquidity aspect, why would you stop? Like at what point, if you were a bank and you knew you were going to get bailed in or bailed out by the very entity that's responsible for keeping you open, then why would you stop borrowing? So expect more of that into 2020 and probably more. And the question is, how will they word this? How will they spin off the narrative? Because they can't continue that it's not QE, especially if their balance sheet goes well above $5 trillion. Because right now it's 4.70625. I looked at the other day. So
Yeah.
by early September, by early 2020, it's going to be above 5 trillion. Then what do you say?
But remember, there's two things, right? There's two things. And like this is one of the things that I get frustrated about because like I started to watch this like what's that guy's name? Jeffrey Gunlock or whatever. He did this like this really long Yahoo Finance interview the other day. And I started watching it and like this guy's not even telling everything that's going on because he's just talking about the repo market interventions. And he's saying, but don't call it QE. But that's not the point. The point is the Fed is also doing $60 billion a month in T-bill purchases, right? That's aside from what they're doing in the repo market. So that is, in fact, QE. And Gunlock just totally he didn't even mention it. Yeah. So I was like, just click stop right then and there because I'm like, my goodness, people give all these people all this credibility. And he's just like completely ignoring the fact that they're buying $60 billion worth of T-bills every single month.
All right, we have a caller, so let's get this, find out what's going on. Hello, caller. How you doing? What's your name? Where you calling from?
Hey, how you doing? This is Alex. I'm calling from New York.
How you doing? From New York. What's on your mind this afternoon, soon to be afternoon?
Again, thank you guys for all your work. I had a quick question. Well, hopefully it's somewhat quick, but basically it's in relation to solving the problem and protecting ourselves. How do people that position themselves with hard, tangible assets like precious metals, land, things of that nature, how do we take advantage and not being taken advantage of in the coming recession? You know, as far as being in debt, you know, needing resources, things like that. How do we maximize the use of what we have at our disposal, you know, against what they're going to be imposing upon, you know, the dollar, like say, for, you know, if the dollar, you know, loses its spending power to a great percentage, you know, what type of role would tangible assets play in that? How can we utilize that to actually take care of ourselves, our family, and use that to our advantage? And maybe even somehow come out a little bit further ahead.
Sounds good. Good question. We'll definitely answer it off air. Appreciate your caller, my friend.
Thank you.
All right.
Well, if I want to touch on it just first, because I would just probably want to go way more simple than you're going to go, Mike. But, you know, I look at it as the fact that, right, it's like, you know, your gold and your silver are your tools, your land are your tools, right? Mm-hmm. And then, you know, so I'm obviously not talking about a reset here, right? So I'm just talking about a run-of-the-mill recession, right? I'm talking about an economic downturn. You know, assets are going to come into favor and they're going to go out of favor. So how do we take advantage of that and even prosper in something like that? Well, what we do is as other things are depreciating in value, right, and as gold and silver increase in value, then you can convert some of that gold and silver into those other things, right? So the stock market goes down big time, right? Then, you know, if you're into buying stocks because you want to have shares in the company and invest that way, then obviously you're going to wait until the markets crash, right? Or if real estate comes down, right? You don't want to buy, you know, right now in New York City. You want to wait until those prices come down, right? So those are the ways that you can take advantage of it by having the tangible assets, which you can like, and specifically I'm talking about gold and silver here because it's different with land, because land, yes, it's liquid, but it's a lot less liquid because, well, yes, it's real, but it's not liquid, right? Because it takes months, right? At least 1 month to buy a piece of property, right? Even if you're paying for it in cash, you still got to go through the inspections and you got to go through this and you got to go through that, right? So it's going to take about a month. Whereas with gold and silver, that doesn't take any time at all. So my point is, you know, in an economic downturn, if prices come down on housing, which I think that they will come down on housing because for many reasons we didn't even get into today, but I think that prices will be come down on housing, then you convert some of that gold and silver that's appreciating in value to some housing. And then you got like that income stream we talk about and you can put up a rental unit or something. So there's plenty of ways that you can do this. And basically it comes down to, you know, just having the patience and the discipline to know when the things that are coming down in value are now undervalued and then moving at that time. Because, you know, yes, I like my gold and silver on the one hand. And yes, I want to pass it much on to my kids as I can. But on the other hand, it's a tool and I will use it strategically at the strategic times. Right now, the strategy for gold and silver is accumulation, especially with silver, right? Mm-hmm. So there will come a time when I'm going to lighten up that load and accumulate something else. But there's always going to be that core gold and silver position there. And I probably hogged the mic too much there, Mike.
No, that's perfectly fine. And so while you were sharing that, you know, the couple things came to my mind are things that I'm going to get into more of, breaking down and defining and trying to strategize around it. And we just wrote down 4 things here. And the primary one is getting as many hands out of your pocket as you can. And so that's just basically debt. And so as much debt that you can alleviate on your own side, do that. So basically, the less you owe people, the more capital you'll have to use for whatever you choose to do. Second will be figuring out, learning new ways of being self-sustainable to where you're minimizing your counterparty risk. Basically depending less upon other factors. So if stuff is being supplied to you, you might want to figure out new ways to try to alleviate that to where you can just do it for yourself or do without it. Because it'll shock to have a whole life built around receiving such thing as energy, and all of a sudden now there's no energy, no power. Then what do you do? So between now and then, figure out some way of getting your own power in some form of fashion. Third one is what I put down here. Is of course tangible assets, things that preserve wealth. And so we know what those things are: precious metals, as well as whatever else, real estate, whatever you might else be into. But I think preserving your wealth, and then finding things that appreciate in value that possibly can produce some type of cash flow. And so just having something that's an asset to you that has minimum risk upon and dependability upon other people will definitely help you. And then the fourth one is my personal favorite one that I'm working on the most is personal intellectual capital. And so I believe that's an untapped asset, and that's basically just you. What do you carry? What are your gifts? What are your skills? What can you contribute of value to where, say, for example, if you were to just remove yourself and put yourself in this other region, you can pick up from scratch and still be able to produce and add value to somebody. So those are my little four methods to my madness that I'll be talking on more as the days go ahead. But
and I just want to add one thing to that, because you make a great point, and I didn't mention it, but I think that your point mentions it, is that being nimble, right? It's like, I see this all the time where people just, their whole outlook is just based on one city where they grow up and where they live. And I don't think that that's the right outlook. I think that the right outlook is, being nimble. And it's not just like with the assets, right? Because the assets is one thing, but the other thing is, where is the opportunity, right? So, my family made a decision to move across the country a few years back, and to kind of have a new chapter in our lives. And that's what we're doing. And we've done that a couple times. Right. So it's like always trying to improve your situation. And part of that is having the tangible things. But the other part of that is being able to be nimble and to move in and out of where the opportunity is.
Right. 100%. I do agree. So, Mr. Half Dollar, we are over our 30-minute point, give or take. So let's get ready to wind this thing down. So hopefully those insights were helpful to you. And of course, those are just our thoughts and opinions, not financial or sound advice. But it's just, my thoughts as to what I like to focus on, as well as Mr. Half Dollar here. So that being the case, everybody's been great hanging out. Any last thoughts you want to leave with Mr. Half Dollar?
I don't think there's going to be much to see in gold and silver here over the next 2 days. I think that's actually the case for all of the markets. Although starting on Wednesday, I think that we're going to start seeing some movement. And I think that movement's going to continue through the rest of the week, because there's a lot of things that are going on from Wednesday until the end of the week. But even if we get through Friday, there still could be weekend movement come Sunday, because the 15th falls on a Sunday, right? It's no coincidence that they put out the 15th as the date. So this is a very important week that we need to kind of like just be aware of our situation on, but it doesn't end when the work week ends. It's going to be all the entire week, and we'll be on top of it again on Wednesday and again on Friday, and we'll have with everybody helping us sort this stuff all out, Mike.
Sounds good. Now, as I look at the numbers of just where metals are at, silver, gold, and platinum, it looks like 1665 as of now, 1463, and then 901. And so after Wednesday's announcement, do you anticipate it going up or down from those numbers?
I anticipate an initial slam at 2 o'clock, because they always hit the sell button first, right? So they're going to hit the sell button and it's going to spike down first. That's what I think is going to come. Okay. If they're hawkish at all, if they hold and if they're hawkish, then I see downside pressure, except we have the inflation data coming out, and we have the retail sales coming out, and the trade issues coming out. So that could counterbalance that really quickly, and we could see a turnaround by the time the week is over. So I think that there's going to be pressure, especially on a hold, and if there's any tone of hawkishness. And then after that, moving in towards the end of the week, I think we could see a turnaround here.
Sounds good. So we will see. All right, everybody. It's been great hanging out this afternoon, soon to be afternoon, on a Monday. Looking forward to coming back to you guys on Wednesday. Other than that, be blessed, be safe, and we'll see you guys later. And as always, if you found us informative, don't be afraid to click the button beneath for a thumbs up. And as always, our information for social media is beneath us. Connect with us on Twitter, and love to continue the discussion there as well. So that being the case, be blessed, be safe. See you guys later. Peace.